We have 200 markets, guys, that will see a 20% drop.
Here we go again.
This is information that you need to know because 200 markets, one of those are your market. We're gonna go over this crazy news, and I need you guys to really dive deep into this video to see if your market is included in this ridiculous, crazy housing market news. The map shows nearly 200 housing markets that could see 20% drop, guys. 20% drop. Now, we do have to take this into consideration that a lot of these homes are overpriced, okay? It is 20% decrease in overpriced homes. But why is this so significant?
Why?
Well, if we're seeing a mass drop in 20% on basically nationwide, what does that say? That says that we are going in the direction that we want. We're getting back to those affordable homes, but it's taking some time. And news coming out like this is in your favor, especially if you're buying. You know, sellers, this still is in your favor too, because this shows that the sooner you sell, the better you will be. A map released this week pinpoints 183 regional U.S. housing markets where prices could decline by as much as 20% in the event of a recession. Now, isn't this funny, guys? I'm telling you, this drop in GDP is already happened. We're currently in a recession based on the definition that everyone uses. We're in a recession. Not only that, but the housing industry understands currently that we're in a housing recession. We're in a housing recession right now, but still there is this view out here that we currently are waiting for the government to tell us that we're in a recession. Hence, this arm of the government that tells us that we're in a recession, they normally lag by 18 months. So we will have already probably come out of the recession before they announced that we were in a recession. Isn't that nuts? Isn't that nuts? The map was compiled by Fortune based on data from Moody's Analytics. The research company found that 183 of 413 largest regional markets in the US are overvalued by more than 25%. Overvalued by 25%, guys. That's big. The map shows that some of these significant overvalued markets, including Boise, Idaho, which is vastly overpriced, just like San Fran, New York, Austin, all of these places have just shot up. Miami, don't even get me started on Florida. South Florida, oh man. Man, it says which is overvalued by 71%. Oh, listen, if you're in Boise, you better be selling right now. Look, if you haven't sold your home and you're in Boise, boy, you about to get hit big. You're about to get hit big. No! In my opinion, Flagstaff, which is overvalued by 60.6%, guys. Oh man, you guys gonna get hit hard too. You're gonna get pummeled. This is once again great news for buyers, guys, right? So if you're in one of these markets or any of these 200 markets, then this is the reason why it's so important for you to look at your local market. I say this all the time, guys. Real estate is local. No matter if you're doing investment properties, no matter if you're buying a home, you have to look at your local market. My market in the Midwest is vastly different than a market that is in Boise, Idaho, or San Fran, or New York, or Miami. Those markets are vastly different from each other. And you have to, once again, I repeat this, you have to look at your local market. If you're not looking at your local market, you're not looking at Zillow, Redfin, wherever you go to look at your homes, and you're not looking at it daily, but you want to buy a home, you're doing yourself a disservice.
Stop it.
A home will not just pop up on your radar, you know, magically. Someone will not hand deliver you a 50-40% discounted house, a price drop. It will not happen. Those homes will be gobbled up, guys, from someone else buying it if you do not currently keep your eye on the market. Remember, we're not in a buyer's market yet. We're going towards that direction, but we still have a lot further to go. Remember, we have fourth quarter, beginning of next year. There's a lot of things going on currently that will bring down the housing market even more. But once again, keep a look on your local market, guys. Make sure you do that. That is so important. Now, let's take a look at this map here. Now, obviously, we see it says the degree in which regional home prices are overvalued and undervalued in 2022, the Moody Analytics. So now, obviously, just look at the colors, guys. So yellow means negative 25%, and then it shows overvalued by purple, and then it goes from that Donatello purple from the Ninja Turtles to a blue, Leonardo blue. If you see here, guys, look at this. All you see on here really is purple and blue. Just look at wherever you are looking for a home, you should be able to find it on this map. And on this map, you should see this is purple and blue all the way. Look at Florida. I mean, you might as well just turn the whole state blue. So if you're seeing this type of activity in your market, this type of activity, it's a color-coded chart telling you exactly what areas are overpriced. This information is invaluable, guys. Take a look at this.
Like and subscribe.
While being overvalued doesn't necessarily indicate that the market's home prices will fall. Significantly overvalued markets historically have a higher risk of seeing prices decline. Now, once again, Moody's is saying this. Guys, just because the price is high, will it come down? Is it a guarantee that it will go down? You will buy a dollar home? No, it's not. And you shouldn't want to buy a dollar home, because if it turns into dollar homes in Austin, oh man, everybody's moving. Everybody's moving, and you won't be able to sell that house for the dollar you bought it for. Once again, this just shows you that, look, my market has a higher chance of seeing these price drops. So make sure I keep an eye on this market to see what's happening daily to get into a home that I'm looking for. Especially if a lot of the guys that are sitting on the sidelines and renting right now. You can't sit on the sidelines and be renting, guys, and not looking at the housing market and currently thinking to yourself,
you know what? I won't look at the housing market until my lease ends next year in March.
Don't do that. Don't do that. You have to actively be looking right now. You want to make sure that you are currently keeping an eye on the market, seeing what's going on in your market. I cannot stress that to you any more than I currently am. The company expects home prices in those 183 markets to fall by 10 to 15% if the US enters a recession, which we currently are. You know, they can't really say it because the government hasn't said we're in a recession. Moody's predicts that those markets will see steeper declines of 15 to 20%, according to Fortune. Elevated home prices and mortgage costs, as well as inflation, are among the factors spurring fear into the US housing market could crash. Meanwhile, experts and economists have been discussing the possibility of a recession in the recent months, with some saying the US is headed for one or already in one. There we go. So some of these economists are saying that we're currently in one, or we're very, very close to one. We all know, based on GDP, we are currently already in it. But once again, guys, look at this information. It is critical to show you where your market currently is when it comes to overpriced homes. And it will blow your mind. It will really blow your mind, and understand exactly what you have in store. These prices are going to continue to go down. In my opinion, we want to really see what's currently going on in the economy. You know, when we get some of this stuff turned back on, we know that Biden currently did the student loan situation where he gave money away for that. So we see that creating more stimulus into the market, which will bring up inflation. And I understand, guys, look, I'm not saying you should go for it. Go for that student loan forgiveness, but it still does stoke a stimulus event, guys, and it will raise inflation, and then the Fed will continue to raise rates. And we just saw news today from the Fed that says they will continue to raise interest rates until inflation gets down to 2 to 3%. And how many interest rates hikes will that take? Currently, right now, we're set to 2, and I'm telling you, it's going to be more either this year and definitely be more in the beginning of 2023. So get ready, guys. Get ready for this ride that we're going to go on this journey of watching what's going to happen with this housing market, because the holiday season is coming up, guys, and we're gonna see where this takes us, guys. Once again, I hope you got value out of this content. I'm gonna need you to watch this next video here. It will help you understand what's going on with this crazy housing market. Also, get into your first rental property. Check in the description below. We have some useful links, guys, for our membership program and also to get your free credit report. See you on the next one. Thanks.